Alright, so this is ᴅɪsᴄʟᴇ here. So I'm going to be teaching on institutional market structure and order flow. So before we go straight into what institutional market structure is, I'm going to need you to actually like this video and also subscribe to this YouTube channel. Okay, so let's go straight into what institutional market structure is. Before we can talk about institutional market structure, we have the two types. We have the bullish market and also we have the bearish market. So in this case, I'm going to urge everyone to actually get a note which is basically designed only for their trading career, whereby you jot all these things down, because basically nobody can sit down and just be watching a video and you think you have everything in your head. No, it does not work that way. You actually need to get a book that you write all these things inside. And again, constant practice also makes perfection when it comes to trading. You don't watch a video and you leave it alone. You have to practice. Anything you learn here today, you have to keep it into practice. Okay, and that is by the way. So market structure itself is like the backbone when it comes to trading. Okay, it's just like a building that does not have a foundation. Trust me, the building will not last long at all. And example again is like a car that does not have an engine. It will not function properly, and a body without a brain, it will not be efficient as well. So this that you are looking at is the engine, is the foundation, and is also the brain behind trading. If you don't understand what the market structure is, or you can't identify a real structure, then you will get it all wrong when it comes to technical analysis. So let me explain what the market structure is all about. When we talk about market structure, we have the two movements in the market. We have the bullish market and we have the bearish market. Like the name implies, the bullish market basically means an upward movement in the market. That is just the market is going up. Okay, it's going from lower prices to higher prices. And also when we talk about the bearish market, it means that the market is going down. Okay, let me use this arrow to represent it, going down. And bullish markets, the market is going up. So we can clearly see the difference between a bullish market and a bearish market. So anytime your friend tells you, oh, the market is bullish, don't get it confused. It just means that the market is going up. And if they say the market is bearish, the market is basically going down. So that's just the major difference between them. Okay, so let me just remove this. So and how do we actually label them, or how do we actually identify a market that is actually going up? So when it comes to a bullish market, there's a way it's being named and there's a way it's moved. So this is an high. This point you see here is an high. This is a low. Okay, this is an higher high. This is an higher low. This is an higher high. This is higher low. This is higher high. Okay, majorly the point where it starts from, where the movement starts from, we used to call it an high, and this is a low, higher high, higher low. Okay, so and what's actually states that okay, this thing should be an higher high. Why is it an higher high? Okay, let me label it for you so that we are going to understand. Okay, so this is the way it's been labeled. This is an high, this is a low, because some people are wondering what I'm saying. This is higher high, higher low, higher high, higher low, higher high. So what actually qualifies the market to be an high or an higher high is basically simple. It's just a break in market structure. Okay, let me show you something. Can you see this? Once an high has been taken out by a new high, then it qualifies to be an higher high. I don't know if you get what I'm saying. Look at this higher high. It was taken out by another higher high, so it qualifies to be an higher high. Okay, so I know some of you might have some questions which I'm still going to answer later, but let's just focus on what we have now. Can you see this? It got taken out. The previous high high was taken out by a new higher high, which qualified. And at the same time, for us to consider it a bullish market, the lows must be protected. Okay, the lows must be protected. You can see something like this. We didn't take out the low. Okay, you can see something like this. We didn't take out the low. The lows are being protected. The lows are not being taken, are not being swept by the market. Okay, so let's just remove all this so as to make it clear. Okay, so let's now go straight to the bearish market now. The bearish market is basically the opposite of the bullish market, we all know that the market actually moves in this direction. So this is our high, this is our low, this is our lower high, this is our lower low, this is our lower high, this is our lower low, this is our lower high. Okay, so let me just label everything so that it's going to make it faster, and we're going to see how it works. So as we can see here, this is an high. In the bearish market, remember that the direction of the movement is downward, it's moving this way. Okay, look at the direction. So this is an high, this is a low. The next leg that is being created is a lower high. The next one that comes is a lower low, lower high, lower low, lower high, lower low. And what qualifies the market to actually create lower lows is also a breaking market structure, simple breaking market structure, nothing more. Okay, you see this low was taken out by a leg forming a lower low. Okay, same thing happens here. The lower low that was taken out created what? A new lower low, and protecting the lower high, protecting the lower high, protecting the high. Can you see? So this is just the basic way to identify a real structure. Okay, so another case scenario that we can have, which people get confused about, whereby the market is not bearish and it's not bullish, let me just show you. Okay, it's they call it a trading range. It's called a trading range. So I'm looking for a particular okay, here, this is it. So let's take the bullish market for example. Okay, that is the market is going up. Okay, we have this, we have this, we have this, now we have this. Okay, if we are to look at what we have, this is our high, this is our low, this is our higher high, this is our higher low. Okay, this one did not break above this one did not break above the higher, it did not break this one. So this one you are looking at is not a real structure yet until it breaks above it like this. Okay, some people do call it complex pullback when a market did not actually break above like this. Sometimes they call it a complex pullback. So complex pullback actually determines. Okay, so so since we have something like that, okay, let me just label it so that we are going to understand what we are saying. This is a bullish market. Let me add to it so that we understand better. Okay, we can all see this, we can all see this. So we can have a market doing something like this, market doing something like this. Okay, market doing something like this, but it did not break above, it did not break above this place, this market place, but it just kept himself here. So what is being called is called a trading range. Okay, a trading range. This is the top of the trading range, and this is the bottom of the trading range. Okay, so this is the top, this is the top of the trading range. Okay, so let me just label everything. All right, so until we break above the top of the trading range, then that's when we consider it another higher high. Okay, but for now, this is the last higher high we have, and sorry, this is the last lower low that we have. So some people might call this higher high and higher low, and some people might want to mark this place as higher high. No, the higher high you must have must break above, must break here, like must break the previous higher high that is being created. But if not, if that is not done, any other thing we are having is going to be inside the range. So reverse is the case when for the bearish market as well. All right, so the same thing is applicable to a bearish market. We have an high here, we have a low followed by a lower high. Look at the new lower low being created. We took out the low, we created a lower high, protecting this lower high, violated the lower low, creating a new lower low. Okay, so this place now we call it the lower high as well, because it's protecting this one, it didn't take it out. Okay, so this whole place we are looking at is actually a trading range for a bearish market as well, a trading range until we break this low. That's when we can consider it a new lower low leg. Okay, if that is not done and we are doing anything inside of this range, yes, then we are still inside the trading range. Okay, so I hope with this it's clear how a bullish market actually books and how a bearish market actually books. So moving on, there is a third aspect of the market. It's called the consolidation market. That is, the market is not doing anything, it's not going up, it's not going down. Okay, it's just there. So I'm going to be showing you an example of how that works now. Alright, so a consolidating market, I would like us to actually do it together because it's going to be very fast. A consolidating market is basically a market that is doing nothing. Okay, when you see a market moving like this, moving like this, moving like this, okay, moving like this, then we will say that the market is consolidating. We are not creating any high, we are not creating any low, we are just consolidating, we are just moving in a range, in a tunnel. Okay, because if we are to look at this, it's going to form like more like a tunnel something. Look at this, look at the highs and look at the lows. Okay, the consolidating market might not be this clean and some might be as clean as this, but either way, it's just for us to understand what a consolidating market is. So after we've understood the bearish market, the bullish market, and also the consolidating market, so I'm going to be drawing a diagram on the screen now so that we can do it together, or you do it first, you try it first and identify the highs and the lows and identify where the market is actually consolidating. Okay, so let me make it live, so that we'll be able to identify it together. Okay, so you can just, as you are seeing it, you can just be labeling it yourself. So I want to make this as slow as possible so that for people who don't who will not quickly understand, I hope we can all see it. I hope we can all see it. I hope we can all see it. Okay. I hope we can all see it. Alright. So I want you to just take a minute and just label this thing in your mind. Just label it, or you can just label it somewhere, draw it somewhere, and just try to label it on your screen. And let's see how far you've gone with the understanding of what I have thought so far. Alright, so you can pause the video and just check through. Okay, pause the video and check through yourself, label it yourself. Okay, to cut the whole thing short, let's take it together. Okay, so I'm going to be using a quick text because I'm not so fast in typing. So this first place that we are having is a low. Okay, it's not an high, it's a low. Let me increase the text so that we'll be able to see it clearly. This is a low. Okay, and what do we call this place? This place is an high. Okay, if we move down straight, protecting it, it is what is called an higher low. Okay, and this place is called what? This high, next high is called what? An higher high. Okay, you get it, you got it. Okay, so it continues, the structure continues, higher low, next higher high. Okay, higher low, higher high. Okay, now some of you might be wondering, what am I going to call this one? This one that you're looking at is basically a low. It is a low. Okay, because we've broken structure, we've broken an higher low. So this place now, it means that there is now a new element in place. So this is just a low. Okay, we've done a low here already, so this is a low, and this right here is an high. And what are we going to call this one? This is a lower low because we took out a lower low. So I know some of you will understand it instantly and some of you might be struggling to understand it, but one thing I want you to understand is that just you can watch the video as many times as possible and just keep practicing. Okay, so this place, it forms a lower high, lower low, low, high, lower low, lower high. Okay, so the next thing that's going to be forming here is what? Is a lower low, and the next thing that will be forming here, what? Lower high. So what is happening here? What is happening here, guys? What's happening here? Consolidation. So some people used to use this box to represent a consolidating market. Okay, so I prefer to use this actually for a consolidating market. So right after the consolidation, we took out this place. It gives us what? A low. This is a low, and what? And high. Okay, anytime a new structure is being formed, you will always have a low and an high first before you start listing them. So this place is going to give us what? Higher low. Then this next place, just tell me higher high. Yeah, higher high. So that's just the way the market is. Okay, so next time you see a market, you don't get confused. The first thing that comes to your mind is the way to label it. Make sure you find a way to label all these things. Okay, make sure you label your high, you label your low, you label your consolidating market. Okay, it's just like we are doing geography. We are mapping out. Okay, you are noting the key points. Okay, that's just the way it is. You don't look at you can't see any good trader that just looks at the market and just be like, okay, I know what is going to happen. You might know what will happen and forget. Yes, so it's better you mark it out. Okay, so what we've done here now, I would like to go on a live chart and show you how it really works on a live chart, so that next time you will just be seeing up and downward movement and you will not be confused. What is all this? Okay, so let me look for a pair that represents, that has the bullish, the bearish, and the consolidating market. Alright, so as we can all see here, the market does not move as clean as we think it is. You might be looking at it, that was all these ones. Now, this was not what I thought, and what am I seeing here? Don't worry, calm down. I brought out this example and I'm here to take you through. Alright, so looking at this whole market structure, you can see that its market does not move as clean as it is. Okay, so I want us to start from somewhere here. Just look at it from here and try to identify your structure. I just want you to have a minute of it with yourself. Okay, just be sincere, just a minute, and just look through it and see if you can identify any real structure or anything. You can pause the video. Okay, so let's just go straight into it. Okay, since we are starting from here, I'll mark this place as my low. Okay, I'll mark this place as my low. Let's make it big so that it's going to be notable. So since this place is my low, and I can now say fine, this place is my low, then okay, I don't want it to be just high. Let me take this place as my high. I'm taking this place as my high. Okay, because it was this eye broke this structure. If you look at it, it broke this structure. Look at it here, so which is giving us another low. So since we can clearly see that the trend of this market is like this, okay, can you see upward trend of the market? Then sorry about that. Then we will now see that the next leg that will form is going to be an higher low. Okay, so which is here, higher low. So where will our higher high be? Our higher high will be here. Yes, your higher high can be here, but this is just a little movement. I don't like counting little movement. Okay, so this place is going to be our higher high. Okay, so this place will be our what? This down place will be our what? It's going to be our higher low. Okay, if we now look at it, what are we meant to have next? We are meant to have an higher high, and the criteria for us having an higher high is that an higher high should break structure. Look at this. This is the last higher high that we had. This one here, we didn't break the structure. So all what the market just did was just to create an high for us, which took out the higher low. I don't know if you see any sense in it. Okay, so when as much as an high is not taken out and a low is not, in as much as an higher high is not taken out or a lower low is not taken out, then we start the labeling again. Okay, so right here is going to be an high, just a normal high. Look at it, look at this one. Sorry, we took this place out, we took it out, so giving us this one, making us the low, making it the low for us. Okay, so let me remove this arrow so that we can, or I can just leave it there in case some people might still don't get it, but I'm sure that some people are following. Okay, so right now, what are you expecting? The trend should be a downward movement. Okay, you might be thinking, what should you number this one? You can't number this one because even after creating this this lower high for you, it didn't follow with a lower low. Can you see? This was not the leg that followed with a lower low. So right here is just a trading range. Look at this place. This is the last low we recorded, and this is the last high we recorded. Okay, so we can't use this. This is a trading range. So the next high that we are going to record is going to be this high. Do you get? So this place is now going to give us our lower high. This is our original lower high that took out what? The low that is here. See, this one did not take it out. It's this leg that took out the low that is here. So this place is going to give us the lower high. All right, and down here is what? Down here, no, this one did not take out structure. All these ones are trading range. This is our real. This is the real lower low. Okay, this is the real lower low. So we can just continue labeling it like that. So in case you are confused, you can just be using the arrow and the arrow as your guideline. Okay, so if we are to move the arrow to this place again, and move this arrow to this place again, what can we see? The major thing we can see in this market is what's it called? A trading range. Look at it. It was this one that took out this high, and we didn't take out any low. We didn't take out any low here. We didn't take out the lower low, meaning that the structure has actually changed again. Okay, so we can label this as a low. Okay, we can label this as a low, and because we took out, this was what took it out, we can label this one as an high. Remember, we changed structure now. So since we are going up, the low is now going to be an higher low. Let me just take it from here. Higher low. So we can basically move this now to the recent higher high and higher low that we have. So the recent high and low rather. Okay. Sorry about that. Alright. So the higher low being protected but the high being violated, what does that imply? We have a higher low here, and at the same time we have this is going to be our higher high. So for guidelines, you can just keep moving the arrows so that you will know where your next move will be. But let's me, I don't actually need them. Okay, so let's take a closer look at this. Was it taken out? Yes, it was taken out. So instead of us, we can just let this place be. Okay, we can just look here. We can just let this place be our higher high, and we really broke the last higher low here. If you can see, let me take the arrow, let me move the arrow to it so that. So we keep numbering it like that for us to understand structure. So over time, you will know that okay, there is still more to structure now than the way we think it is. Okay, we broke the structure now, so the numbering continues like that. It continues like that till we get to the recent market price. Okay, so you can for reference sake, you can probably screenshot this. Okay, you can just screenshot this, and so that you will know how the market works. Okay, can you see? You can see them now. You can see it now. So if your labeling is like this, congratulations, you've just passed the first test in the free mentorship program, whereby you know how to label your structure, you know how to identify all your real structures. Okay, so and if you're not yet there, it does not mean it is over yet. Okay, so it's just that you just need to work more on the way you identify structures and just read more, check the chart more. Okay, all right, so I want us to identify restructuring about ourselves. Okay, so let's start from somewhere here. This obviously is a low. Let's just make it L to make things faster. 16 black. All right, this is a low, and right here is an high. Okay, it's just for us to identify structure. So this, what you are looking at here, is just more like a market replay, and this gives us what? This gives us a higher low, because if you look at the trend of the market, it's an upward movement, and at the same time we broke structure. Look at it, we broke the structure here. Can you see? Let me change the color to black. Yeah, we broke structure here. So if this is our higher low, then let's see how it plays out. So you can see all this movement, all this back and forth movement here. This is pure consolidation. It's not doing anything. Okay, it's not doing anything. So an higher high has been formed there. And higher high has been formed there. Okay. Can you see? It was taken out again. Which low took it out? This low. So, okay. So this is going to give us an higher low. Let me expand it for us. So we don't know where this one is going to end. So we just have to wait for it to come down and go back up. Okay, don't rush it. You'll see it play out. Can you see that? What took it out? So this right here is our real higher high, and this again is our higher low. Okay, don't rush it, don't rush it. Let it come back down and take it out. Can you see now? Another higher low and another higher high. So we can keep labeling the market like that. It can keep going, it can keep going. Did you see that? Our higher low that we've been protecting since higher low protected, higher low protected, higher low just got taken out. Okay, it got taken out. So what is this one going to be? It's going to be an high. This is going to be an high. So we don't know where this market is going to end. We just have to wait for it, and let's see what's the market. So all these places, this is consolidate. The market was just basically consolidating here. Okay. Okay. We are watching it together. Okay. So this is high, this is low. And at the same time, this high got taken out, which makes this one our valid higher low. And we don't know when this one is going to finish forming. Okay, so I'm just trying to show you the basic way on how to identify structure. Okay, the structure can go like that, like that, like that. This is higher high here, this is higher low here. So it keeps going like that, like that, like that. So it's just for us to identify what real structure is. So this is going to be the end of this video for today on market structure. So you can practice it on yourself, on your own, and work on identifying the real structure. So the assignment on this episode is going to be that take 2 weeks. Okay, take 2 weeks of any pair of your choice. It can be BTC, it can be Euro USD, it can be SND USD, it can be Nasdaq. Okay, 2 weeks of it and identify the real structure. And you can send it to any of my social media, be it Instagram, be it Telegram. It will be all my everything will be provided in the description below. Okay, and don't forget to like, comment, and also share this video, and don't forget to leave the subscribe button. Okay, subscribe to this YouTube channel. Thank you very much.